Good. So again, good morning, good morning, good morning. It's 6 o'clock. Well, it's 6 minutes past 6, right? It's time to make some money. Guys, if you're on this call and you don't know the sessions, that you should be trading in, let's start with that. So you have 2 sessions that you want to really focus your trading on. The London session, which starts around 2 a.m. at this present time, until the end of March, 2 a.m. and closes at 1 p.m., right? The New York session, starts at 9 a.m. and closes at 6 p.m., right? So in the London session, you're going to look for movement in majority of the pairs, but primarily on the Euro pairs and the Great Britain pairs. So pairs that have Euro and pairs that have Great Britain, you will be looking for movements on those pairs during the London session. All right, so make sure you write that down. During the London session, we're looking for movement in the Great Britain pairs and in the Euro pairs. Right? Now, at the start of the New York session, or coming up to the New York session actually, you start to get some movement now in the US pairs. So anything paired with the US dollar will now start to have movement within this session, right? And this is important. You will have the most volatility and so on in the pairs between 9 a.m. to 1 p.m., right? You will have the most movement in the pairs between 9 a.m. and 1 p.m. The reason for this is you will have an overlap in the sessions between the London and the New York. So remember, the London closes at 1, New York opens at 9. So you'll be having an overlap of the sessions between 9 and 1, and this is the time that you get the most movement. So if you see a setup on any of your peers, you're going to get the most movement on it between 9 and 1, right? Make sure you're writing this down. A lot of people right now staring at the screen, the eyes red, cold in the eye, the yawning. Make sure you're making notes, right? Good. So one thing I want to say is that in any pair that you've entered a trade on, right? If within 2 hours and you haven't had a movement in that pair, or you are not in profits, for example, within 2 hours of entering that trade, you've entered the trade too early. Right? So if you have not had any movement in any trade that you put in, within 2 hours of entering the trade, you've entered the trade too early. And that's okay. That's all right. Right? Because we're not always going to be exact. We're not perfect. There's not a perfect system. Right? But for me, I'd rather be early than late. Right? I'd rather be early than late. This is where risk management comes in. Managing your risk so that even if you have a slight drawdown before the move start, because you're early, that your account should be able to handle it. Right? So an example of that is right now, probably the whole world that is in Forex is selling USD CAD, is selling AUD CAD, is selling AUD USD, is selling USD JPY, and the JPY pairs. But everybody in a drawdown, right? Because we expect the move to happen, but we're really looking for the volatility to push, right? And right now, all of those pairs are flagging on the 1 hour time frame, and we haven't had the pushes yet. So It's not that we have entered wrong, but we've entered early, looking for that volatility, looking for that movement on Tuesday to push the trade in the direction that we expect it to go. Right? So, one more thing that I want to say, guys, is risk management, right? Risk management. All right. So, if you don't know what that means, your account is under $100. The most you should be trading at is 0.02. The most. Do not enter more than 2 entries per pair. So if you're looking to get into USD JPY for sell, you should be in USD JPY twice the most. And not even that, I usually encourage. I prefer you to get in first with one trade with USD JPY and then wait for it to then continue, flag again, or wait for it to give you a second confirmation before you enter your second order. So let's go to the chart. Let's go to BB so we can see what I mean. For example, in EJ yesterday, right? We had a good 100-pip move total with EJ yesterday. Fantastic movement that we had. Let me just shift this. Good. So, bounce back confirmations, right? Bounce back confirmations. I can start doing praises, And let me just say this, because when I first started the bounce back, when I first started this bounce back challenge, I did say to be consistent in posting it on Instagram, to be consistent in tagging the relevant persons so that we can see your consistency. There was a reason for that. Now, people don't usually be consistent unless they know that something in it for them. But you don't always have to tell people that something is in it for them. Yes, you being consistent will help you to become more profitable. And that's where a lot of people don't understand, right? Please do not jump from strategy to strategy. If you're using bounce back and you're going to use bounce back alone, and all you need is a trading plan that will help you build your account solid on bounce back, message me, coach. I want a trading plan to help me with bounce back so that I know for sure that I can use bounce back only, but I just want something that, that I could use to build my account, lot sizes and stuff like that based on my account balance. Message me, right? But at the same time, guys, do not jump from one thing to the next, one strategy to the next. I'm telling you, it's going to be bad for you. It's going to be bad for your organization. It's going to be bad for your business. Remember, trading is your business, This is no different than you going into a store in town. This is your business. Just like how whoever owns a store is their business, this is your environment that you need to manage. You need to manage it well. Right? You need to make sure that you have your environment under control. So if you're using bounce back, stick to bounce back. IML just released a whole heap of products, pivots, binary, blah, 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 it works, right? And I can give you some advice. Those that are building, those that are marketing, right? Make sure that you have general knowledge and you know how to use the products. It doesn't mean that they have to be the strategy that you use to build your account daily, There's a difference. Having general knowledge and knowing how to use the products, right, is different than you using it as your everyday strategy. You have to have the knowledge in order to help your team to be more diverse. Because the company is now based on diversity, right? So if you're building your team, your team should be able to come to you and say, Kamaya or some other leaders on here, you know, I want to do binary. When you know about the product, you should be able to guide them. It don't mean that it has to be the strategy that you use. So get a strategy that you know you can stick to and stick to it. Stick to it. Challenge yourself to a 90-day challenge. All right. So let's continue. So EJ yesterday, confirmations, first confirmation that we need to do first, we need to find out where it's telling us to sell the trade, 127.117. So we already know, draw a horizontal line, right? And let's see where price was when we were supposed to enter for this sell. Right now, this trade is on the 4-hour time frame. As you can see, Bounceback has some upgrades where now they actually tell you the time that the trade was released. Very handy. So you will know if you come and you look and you see this trade later on at 1 o'clock, it got sent out at the time. My time might be different because my laptop is based on Greenwich Mean Time, the UK time. So good. So now we're going to come down 2 time frames from the 4-hour time frame. So we're going to the 30-minute, right? 2 time frames. And we're going to draw a trend line, right? Now, it's really good that Bounceback has given you the time that this trade was called, because what it's basically telling you is that even if you're doing your back testing, your trend line should be around the time that the trade was called. Although, strangely enough, I don't see the time at the bottom. 1 second. Let's see if I had to minimize it, if it helps. No. Right. So I don't see a time at the bottom. But if that's the case, something that can help you guys is you can literally just take this information and go straight to TradingView. You don't have to do it on here. So if you realize that you can't identify the time on the Bounceback chart, TradingView, and pull up your Euro JPY on the 4-hour time frame and just follow the procedures. All right? Don't make it difficult on yourself. Good. So let's draw the trend line. So drawing the trend line for this sell, right? Drawing the trend line for this sell, you are coming from any of the lows. Yes? You can come from this low to this low to over here. You can come from this low to over here. You can come from any of the lows. The difference between, because I've had persons asking me, but isn't it not this one, coach? Which trend line is the one? Shouldn't it not be this one? This one gives you a tighter entry, which is good. Keep it nice and tight. You get in early. Notice how the sell move happened right after the trend line was broken. All right? It doesn't mean that the person that drew it from here to here was wrong. The person that drew it from there, from here at the bottom up to here, still good. You got the sell too, right? But the other person would have gone in a lot earlier, probably still holding the trade, so they get majority of the pips, but you get a good pip movement too, right? Because you literally got 50 pips. Whereas the person that would have gone in from the top got 100 pips, right? Okay, so today's class is based on risk management because you already know how to trade BB. So with this now, right? With this, let me use the other one. So bringing it from here to over here. right? You're gonna drop one time frame, 15-minute time frame. No, call levels, real simple. A lot of people complicating this thing with the call levels. It's super easy. Don't complicate it. All you're gonna do is, first of all, let me help y'all. Good. All right. So, first of all, nothing happened on this trend line as yet. The trend line was not broken. As you can see based on my screen, I blacked out the trade. Right? Coach, where would I put my call level in this case? Anywhere below your trend line. Now, your trend line should be drawn past your trade. There are people that will come and draw a trend line and literally put it here. Like, why? Why? Carry it past. Right? Give yourself room to play with. Right? Give yourself room to play with. Let me check the comment box. Second, let me see what's going on here in the comments. Marissa says she can't see anything. Yes, everybody was seeing my chart. Everybody was seeing my chart. Okay. So let me go back and share my screen. Okay, cool. All right, good. So my screen is being shared again. So basically you're setting your call level anywhere below. So, but when I say below the trend line, some things you need to take into account is below the trade. So if the trade is above here, you wanna, and the trend line is coming up here, you're putting your call level below the trade, also below the trend line, because what you're doing is that you're predicting the move. So you're predicting that the trade, let's say the trade was here, you're predicting that it would eventually come all the way down and then break your trend line. So you're predicting how it will go. So give yourself some room. Look below the trade. So all you need to do is come down below the trade and go across to the trend line and say, okay, all right, this is where I can set my call level. Right? Your call level is not goal. Your call level is just a notification to help you so that even if you're busy, you can still use this as a way to give you a notification to tell you, well, the trade setting up or the trade ready. It's two things it can either tell you. The trade setting up or the trade ready. Right? So set a call level. Could have set the call level here, right under, right? And then the call level will notify you. And one thing I want to say, because I know a lot of you don't do it, when you're setting your call level, make things as simple as possible for yourself, right? So first of all, stop loss. We already know the stop loss is going to be above the last high. So anywhere above, please do not put it on the wick. Give yourself a little space anywhere above the last high, right? So there, that's your stop loss, right? For those that are more aggressive, you could get a tighter stop loss based on every time the trade would have came back and pulled back before it actually broke the trend line. By that, I mean, you could have bring your stop loss here because this was the last pullback before the trade dropped. This one here, right? Now, your stop loss is your risk management as well as your lot size. So if you got an account that is under $100, please, please, please do not enter this trade more than twice with a lot size of anything above 0.03. Literally, please. If it's under $50, please trade at 0.01. Please. it will help you to stop blowing your account. Right? Good. So risk management, stop loss. This is the aggressive trader stop loss. Conservative persons, which should be the most of you, because most of you are beginners, put it above the last high. Right? All right, coach. So where my take profit should be. How can I work up my take profit? One or two things. You could follow a pick plan where on each BB, you're only taking 15 pips. So when the trade reach 15 pips, you're out the trade. Or zoom out, look left, right? Look left. Look for areas of rest. So I'm going to draw them out. Let me change the color. Areas of rest. In other words, previous lows in the uptrend, in the previous uptrend. This is a low, right? This is a low. All of these are take profit points. This is a low. This is a low. You have basically 4 areas that you could look to take your profit. I'm going to remove the black screen now and show you. So first take profit would have been hit. Had you entered the trade here when it broke, so let's say you entered the trade after your call level. The first take profit gives you just about 20 pips, just under 20 pips. That's the first take profit. For those holding, if you have went to the next low, that would have been 50 pips. Right? So your take profits in the sell position is based on the lows in the previous uptrend. Your take profits in a sell position is based on the lows in a previous uptrend. That makes sense? If you understand what it is I've just said, give me some numbers. Somebody asked, Coach, if price break the trend line, do we wait for the formation of just one candle before entering? Okay, so if price broke the trend line, let's go back here. If price breaks the trend line, and I literally went through this the other day with someone, right? Let me put back my little black thing here. Something that's going to help you guys right now, right? If price broke the trend line, you will notice that if you look to the left, let me move this so you can see it properly. Don't want to confuse you. If you look to the left here, you're going to see a timer on the, sorry, not on the left, on the right. Getting confused early morning. If you look to the right, you will see a timer, right? The timer on the right, as you can see right here, tells you when the candle is going to close. So if you see that the candle has broken your trend line, like here, for example, and the candle has not finished formed as yet, all you need to do is look right and see what time that candle is going to close. How much time is left before that candle closes? Because you do not want to enter the trade when it looks like it's breaking, but then it actually goes back and close above. It's a fake out. Right? So all you need to do is look right where you see the prices, look right, and you're going to see a timer right here tells you when the next candle will form and when this candle will close. So you're waiting on the close of the candle. Right? You're waiting on the close of the candle. So that's all you're doing. Okay? Now, one more thing I'm going to do before we close today's call is if you would have entered this trade here or around your call level, so anywhere around here, Let me put an ellipse so that you can see what I mean. Some of you may just be trailing your stop loss or whatever. If you are entering the trade, right, it comes down, it retests. So you see the retest there, right? And then it further drops. Now, if you were holding this trade, you will move your stop loss, right? Move your stop loss to the previous high. Just be strategic in what it is you're doing. So even so, right now, if you have moved your stop loss to the previous high and this did this drop and you're still holding this trade, notice it never came back yet and hit your stop loss. So you will still be in this trade, you will still be in profits, and your stop loss will be in profit. Risk-free trade, and you're holding this trade. The JPY pair is expected to drop, right? Or continue their sell move. So right now, you're still holding. So that's why I tell people, I prefer you to set a stop loss on your chart than to sit down and think, oh, I'm only willing to lose 30 pips. I'm only willing to lose 25 pips. 25 pips or 30 pips is not structure on a chart. 25 pips is just a number that you're telling yourself, I'm only willing to lose this amount of money. But it is not strategic. You want to be strategic traders. You need to have a proper strategy. You need to see why your trade moved from, if it was down here and it was at $100, why it moved from $100 and now it back up at 60. If you look at the chart, you will see the chart pull back, made a flag, and your stop loss is in a strategic area, right? So notice stop loss just above the last high. Every time the trade makes another high, you're moving your stop loss down. So for those who just prefer to trail their stop loss and not cut a winning trade, right? So if you don't want to cut a winning trade and you want to keep on winning with it, all you need to do is come to the chart, look and see where was the last high if it's in a sell, and move your stop loss, because we originally had it over here. So move your stop loss from here to there, right? When this trade drops now again, you will move your stop loss from there to here when it drops. And as it makes another high, you will move it to above the last high. That is a strategic stop loss. That is not me saying, I only want to lose $5. I only want to lose this amount of money, right? You losing money is based on how much lot size you went in. So going to a lot size favorable for your account, that your account can handle, right? So that should be really good for you today, guys, in terms of a training session. That should have helped you in terms of how do you do your take profit, right? How do you do your take profit? If it's in a sell, you're doing it based on the previous lows, right? And stop loss just above the last high, just above the last high. So if this call was useful, if I have taught you something, if you have learned something in this call, say it now in the comment chats. If you have learned something in this call, say it now. If you're following and you've learned something today, say it now. That's right. That's right. All right, guys. So remember, we try to keep this call as short as possible for the working people. So guys, have an amazing, 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 profitable day. Apply the rules, apply the strategy, go out there and be great. All right. See you guys on Thursday morning at 6 o'clock, where we do some more training again. Be great, guys.